Welcome back to Worldwide Exchange. Let's turn to housing for a second. U.S. investors expecting fresh news on the housing sector with existing home sales. Yesterday, we got some positive news on housing starts, which rose to a 17-month high. Joining me now is Timour Shafran, VP of Investment Sales at Kaplan and Associates. Timour, thanks for coming on the program. I'll talk about the macro sense that you focus on New York, correct?
Yes, I do.
And you're in commercial mainly?
Yes, mostly in commercial real estate.
So all these canaries in the coal mines that we're talking about commercial real estate to be the shoe that dropped that never dropped. And now give us a sense, before we get to some of the other bigger data points, how is the state of commercial real estate from where you are?
It's growing. In the multifamily sector, you're seeing a big boom at the moment. People are putting their money to work there. They see a nice yield.
And housing starts, that was actually the big pop, was in the multifamily houses. And
yeah.
What's the appeal?
The appeal is that most people are thinking that people cannot live too far away from big metropolitan areas. They're moving back in. They can't qualify for loans to buy, so they're renting. Multifamily housing is taking a big jump.
So as an investor in real estate, what's the advantage there? It generates cash flow?
It generates cash flow. It gives you nice yield. You have the security that people need to live somewhere. And they have their jobs there. They're close to their jobs. And in general, you have good growth potential in terms of income and in terms of the appreciation of the property.
When did it hit bottom for you guys?
I would say probably October, November of '08, going into the winter '08, '09.
And guest list has a question. So if that's the case, how much better is it now than then?
Oh, substantially better.
25, 50, 75%?
I would say the market is up about 15–20% from that point,
all right,
which was about 40% down from its high.
Right. Henry, go ahead.
Yeah, no, I was very interested, just with regards to the yield you see, if you like. What is a sort of achievable gross yield, if you like, and then, and the costs associated behind that. So, how would that net out, if you like, just to gauge the yield that is on offer from real estate?
Well, a lot of properties in New York, depending on where you're buying, obviously prime Manhattan versus some of the boroughs will yield you less. But I'm seeing yields of anywhere between as low as 5 and 6% to as high as 20 and 30% yields.
Huh. So, but it's a high barrier of entry, correct? I mean, especially in New York, you don't find a lot of bargains now in the properties you're dealing with.
No, not true at all. There are bargains out there. People are still buying distressed or quasi-distressed assets that were way over leveraged. They're working with the banks that hold the notes, and deals are getting done. A lot of the downside is being hit off by the equity that was originally put in by all investors.
So there's still some distressed elements on the ownership side, so there are prices have come up, though, correct?
Yeah, they have come up, and so a lot of people are recouping some of the equity that they've lost.
All right. Well, Timour Shafran, we appreciate the insight on the real estate market. VP of Investment with Kaplan and Associates here on Worldwide Exchange. Coming up next, Microsoft expected to report a first quarter sales jump after the